Assalamualaikum warahmatullahi wabarakatuh. My name is Nick Muhammad Amin bin Sharifullah, and for today I'll be presenting ABM Fujia Berhad for financial instrument. Based on my findings from the financial statement of ABM Fujia, the initial recognition of financial asset and financial liabilities, an organization should acknowledge financial asset or financial liability on its financial statement only when it becomes involved in the contractual terms on instrument. The company corresponds to the MFRS 9 under the Chapter 3.1 initial recognition. The information was acquired through the official website of Malaysian Accounting Standards Board, Malaysian Financial Reporting Standards (MFRS), specifically MFRS 139, 132, 9, and MFRS 7. The information was obtained through extensive analysis between the standards set out and the financial statement of the company. So if we look through the MFRS 9, the information is located under Chapter 3, Recognition and De-Recognition. Throughout the analysis, it is clear that the financial statement followed the mentioned accounting policies. Throughout the analysis, I have compared the data from diverse and reliable sources, which is the MFRS 9 and the annual report produced by the company. From the comparison, I have concluded that the annual report produced by the company follows the Malaysian Financial Standards Board 9 because of the identical procedure listed out and the annual report, page 78, summary of significant accounting policy for financial asset and financial liability. Moving on to the second point, which is subsequent measurement. After the initial recognition, ABM Fujia measures its financial asset at amortized cost. The amortized cost category includes financial assets that are held within a business model whose objective is to pool assets to collect contractual cash flows, and its contractual terms give rise on specific dates to cash flows. There are solely payments of principals and interest on the principal amount outstanding. The objective stated in the financial statement regarding subsequent measurement falls in within the conditions stated out by MFRS 9. The information was acquired through the annual report of ABM Fujia from the Bursa Malaysia website and the Malaysian Financial Reporting Standard 9, financial instrument under the Chapter 5.2 and 5.3, subsequent measurement for financial asset, financial liability. The information was obtained through comparing and analyzing the annual report, specifically under significant accounting policy and the MFRS 9 between the standards set out and the accounting policy of the company. Throughout the analysis, the comparison between the annual statement and the MFRS 9 clearly showed that the company followed accordingly with the standards set out by MFRS 9, which the MFRS requires the company to measure subsequently the financial asset at amortized cost, fair value through other comprehensive income, or fair value through profit or loss. Lastly, ABM Fujia discloses its financial instrument in accordance with MFRS 7, where MFRS requires disclosure by class of financial instrument. An entity shall group financial instrument into classes that are appropriate to the nature of the information disclosed and that take into account the characteristic of those financial instruments. An entity shall provide sufficient information to permit reconciliation to the line items presented in the statement of financial position. The information was acquired through the annual report of ABM Fujia under notes to the financial statement number 35, and the lecture notes acquired from the Oceania under the topic of financial instrument. The information acquired was through substantive analysis between the standards set out by MFRS 7 disclosure, paragraph 6, and the annual report of ABM Fujia Berhad. The analysis, I have checked all possible information that seems useful, and my verdict is that the company managed to comply with the requirements of Malaysian Financial Reporting Standard 7 as the company discloses all possible items regarding financial instruments. Lastly, basic EPS. The group's earnings per share for the year dropped to negative 1.17 cents in financial year assessment 2022 as compared to 0.84 cents in financial year assessment 2021. For financial year assessment 2022, the group recorded loss before tax of 0.53 million ringgit, which compared unfavorably against profit before tax of 2.41 million ringgit in financial year assessment 2021. The decrease was contributed mainly by the increase in interest rates and interest costs, reduction in realized foreign exchange gain, increase in freight charges, as well as due to the losses contributed by new plant factory of FUIA. So the information regarding earnings per share was acquired through the company's annual report, page 5, under financial highlight and financial indicators. So I think that is all from my presentation. Thank you for listening.